Thanks, Chair. Can I refer to page 25, which is page 21 on the report? That's how the numbers are set out. At the bottom of page 25, it says, in light of the observations and conclusions set out in the Ofsted report of January 2020, we are unable to conclude that the Council has proper arrangements in place to ensure it took properly informed decisions and deployed resources to achieve planned and sustainable outcomes for taxpayers and local people within its children's social care services during 2019-2020. And I've been looking back, Chair. In 2016-17, we had just over £1 million overspend on the budget on children's services. 2017-2018, we had a £1.5 million overspend on the budget. 2018-2019, £3.3 million overspend on the budget. Last year, 2019-20, it was 7.2, and that's why as the officers just stated, that's why it's been qualified. And the projected overspend for this year, which is 2020-2021, is £6.699 million. That's been taken from the executive report from the 24th of November of this year. So could I ask a couple of questions as who is responsible to ensuring this service does not overspend?
Ian, is that one for yourself?
Absolutely, Chair. I can take that if that's okay. The Council's budgetary framework means that each director has delegated authority for their own area, so that they get a budget that's set at the beginning of the year, and it is their responsibility to spend within that budget. And sometimes that can be complicated. Sometimes we can have provisions for demand in demand-led services like social care and adults and children's, but that is how it works. So the director has responsibility in that area. Obviously, with the situation that we're currently in, with the Ofsted report, and obviously also in the fact that when we're dealing with children's social care, we have statutory obligations. It's not like we can say the money's run out and we are not going to help families or children who are in need. So it is an area where overspends are more common, and it's in my opinion, the greatest risk to this council's long-term financial sustainability is the challenges we need to deal with in children's social care. So, as I say, the answer is technically the director, but obviously with the situation that we are in with Ofsted and with an inadequate children's services department, I would argue that it's a whole corporate issue to deal with the quality of practice in that service. And I also believe, as does Sue Butcher, the Director of Children's Services, that in the medium term, dealing with the quality of practice in that service will allow us to regain the control that we would like over expenditure. Chair.
Just to follow up on that, Chair, please.
Yeah,
thanks for the response, Ian. Given that fact, I mean, it's just a recurring theme that it's always overspent. I take into account it's very difficult to set a margin, an exact target, because it's quite fluid. But these are massive amounts that we're overspending. And given the fact that it's being qualified because of that, of the Ofsted report and the overspend, can I ask what actions the Council will be taking to ensure that this damned state of affairs does not continue into next year? Thanks, Chair.
Shall I respond, Chair?
Pick up on that, Ian.
Brilliant, yeah. So the figure you were quoting for the £6.7 million forecast overspend in the current year is the headline overspend against the budget that was set for children's social care at the start of the year. When we set the budget for 2020-21, we also set a £3 million demand provision in central services, which is there in case there was further overspends in children's services. So that can be offset against that, which leaves us with a net £3.7 million forecast overspend. There are a number of initiatives taking place, chiefly, as I say, the work around the improvement journey and the improvement of practice, which will allow more timely and higher quality interventions for children, which are, generally speaking, in the long term, less expensive interventions for children as well. There's not a contradiction here between improving practice and spending more money. You know, if we do things better, we will, generally speaking, spend less, because a lot of the expenditure we have, for example, around residential care placements, is a result of where our services have been ineffective in the past, and children end up in expensive places because they're struggling. So the improvement journey is one. There are specific investor save ideas, one of which was at executive this week around Innovate. And there are other ideas that are being considered by the service, including, for example, Daniel Court and the Futures for Families Hub, which are now up and running, which allow us to provide services for our children in-house, which is less expensive than doing that externally and paying third-party providers. So it's a long road, Councillor, but I think we are going in the right direction at the moment. And it's a key part of our budget setting when we get to 2021 and further forward in the medium-term financial plan, to make sure that we've made appropriate provision for that in light of our financial sustainability.
Thanks, Ian. Thanks, Chair.
Does anybody else? Councillor Rooney, I've noticed you've got your hand up, Councillor Chris Hobson, but I'll come to you after the committee first, if that's okay.
Thanks, Chair. Really just taking that on, we've seen some horrific figures recently about the number of children in deprivation in Middlesbrough. Are we confident that we're going to be able to set a realistic budget to cope with the demand for next year and the years going forward? Thanks. And I know that's a slightly separate issue, but it's just leading on from what Councillor Hubbard said.
Ian, do you want to pick up on that?
Thank you, Chair. I think, to me, it's not a separate issue, Councillor. I think it's the core of the issue, and it comes down to our status as a going concern and our status and our financial sustainability as an authority. We are confident because we believe we've made appropriate provision. I think, as is reflected in the Ofsted and the Commissioner's work, that the service itself has made a huge amount of progress. There's a long way to go, but a huge amount of progress in improving their effectiveness. And so we're in a place now where we understand far better the demand and we understand far better the impact of it. That is allowing us to forecast it in a more effective way than we have in previous years. So again, I wouldn't sit here and say to this committee that this is anywhere near perfect at the minute. And it is the thing that is the greatest concern to me in my role of trying to balance the council's budget. But we have gone in the right direction, and that is being led by the service itself. And I think, as we've demonstrated with the Innovate project, for example, we're in a situation now where if we do some investor save type initiatives, we can be confident that that money will be spent effectively and that it will have an impact both on the lives of children and also on our financial position. And to me, and EY can come in on this if they need to, but to me, what the value for money judgment is saying there is because the quality of our services was so poor, the money we were spending, we cannot be confident was being spent effectively. And I think that's an entirely fair assessment to be made of where we were in 2019-20. I think we're better than that now. Whether we are 100% confident that we're spending the money effectively, that's a judgment for another day, and I'd be surprised if we were there. But it's going in the right direction. Thank you, Chair.
Okay, nobody else off the committee's indicated. Councillor Chris Hobson.
Thank you, Chair. As you know, I'm an observer, and it's very, very rare I want to come in and say anything. But on this one, I really do want to say something because I've been at meetings recently, and actually Ian said most of what I was going to say anyway, but we are certainly going in the right direction. And the one thing that I did ask for at the last meeting, because the improvement looks so much better, and we're definitely not there. We've still got a long road to go on. However, one thing I did ask for was a briefing for all councillors to show you all the way of the work that's been done and the work that's going to be done. So I would like you to understand the progress that we've already made and the progress that we're hoping to make in the future. And that will be coming up very shortly for all members to have a briefing on. So thank you, Chair.
there are no other questions or comments. I mean, there is only one thing I would like to ask, and I suppose the easiest way is putting it in layman's terms. You've said that there's a long way, we're not there, and probably won't be there for some time. So this value for money qualification, is that likely to reappear again 2020, 21?
I guess that was the point I was trying to fudge, Chair. To be honest, I don't know. The judgment for next year will be made over the full period of 2020-21, so it will depend on how much progress we've made by the 31st of March. I would imagine that our external audit colleagues will place a great deal of reliance, as they have this time, on the opinion of Ofsted, the DFE and their commissioners. So we'll see how we do on that journey. I think that's the key.
Thanks for that, Ian. Yeah, on that basis, I'll move on to the next agenda item. So if we can move on to the audited statement of accounts for 2029-2020, and I'll hand that over to the relevant officers to present.
Can I just mention, Chair, that under agenda item 4, there's still the audit results report for the Keysight pension fund. So I don't know, Mark and Stephen, if that's something that you want to cover before we go to item 5.
Yeah, good. Go back onto that. We'll go back to agenda 4.2. I was going to move it. Seems we've looked at the audit results. I was going to go to the audited statement of accounts, but there's no harm in doing the pension fund now.
Shall I take that report then, Chair?
Yeah, please.
All right, thank you. So I think the first thing I would just like to acknowledge is, as we did with the council, obviously we work with a slightly different team within the authority for the pension fund audit, underneath Ian with Nick Orton and his team. So, you know, we'd extend our thanks to them for the support through the audit process in this difficult year. So if I just run through the key points from our report, and I'll start on pages 58 of the slide pack. The misstatement due to fraud or error risk, much similar to the council, we don't have anything to report, and I'd just like to confirm that fact. Moving on to the next few pages, I'll take them in aggregate. So we've set out in the report the different aspects to them. But the key thing here is, I think, is a lot of the investments within the pension fund are what we call level 3 investments. So they are investments that are not valued in reference to public information. So, you know, share prices that are traded on a market or derived from a market information, etc., which inherently makes them more difficult to value. Obviously, this year, COVID-19 had quite a significant impact on the financial markets and the investments of the pension fund, and you saw that with the reduction in the value of the fund relative to the prior year, bearing in mind, of course, it had gone up prior to kind of COVID-19, so that reduction was more marked than from the previous year end. So what we've done is we've had discussions with management around actually how have they reflected that, or how have they challenged the investment managers to make sure that the impacts of COVID-19 on those level 3 investments have been reflected in the financial statements. We've explored their communications with the investment managers. We've written to the investment managers ourselves to collect some information from them. And off the back of that, we are comfortable actually management have reflected the impact of COVID-19 on the financial statements. What we did, however, identify was a number of misstatements within the information used to prepare the accounts. And we list these out on page 60 of the report. I won't run through each one. But there's 2 themes I want to pull out. So the first theme was around the information coming from the custodian. So we noted a number of cases where the information that was coming from the custodian wasn't correct, double counting of investments or purchases and sales during the year not reflected. And that led to a number of the misstatements. So we've raised a recommendation later in the report, which management have accepted, around how the council reviews that information from the custodian and cross-references it to their other information, for example, where they know purchases and sales had taken place. The other one is a balance of £13.9 million, which is effectively unsupported. I think it's a cumulative balance of accounting entries over time rather than an investment as such, if you like. That's still in the financial statements for this year. We've reported as an adjusted error, but what management have agreed to do is look at that during the following year with a view to working out where the entries for that have come from and resolving it in next year's accounts. We're happy that that's not a material balance. The other aspect of the level 3 investments was property, and we've talked about the context of that in the councils. Obviously, for the pension fund, all of the assets tend to be more of a commercial and generating income purpose. So we've asked our EYRA experts to look at a range of those assets across different categories, focusing in particular on retail and assets which had higher risk of misstatement with the result of COVID-19. Once again, we're happy that the valuations used are within the ranges we would expect. We did, however, note that they were towards the upper end of that range, so comfortable with the numbers, but just to be aware that they're towards the upper end of kind of a reasonable range of the valuations. So I'll leave it there. There's nothing else in particular I want to highlight in the report, but I'm happy to take any questions from members.
Do any members wish to ask a question on this point? Okay, from those that are visible, nobody's indicated. Okay, thank you for that. For that report. We'll move on to the next agenda item then, which is agenda item 5, the audited statement of accounts for 2019-2020. And Justin, this one's yours.
Yeah, thank you, Chair. There's quite a lot of overlap between agenda item 4 and agenda item 5. The statement of accounts have been audited over the past 7 or 8 months, and I think that a lot of the things will probably be discussed already. But essentially, the purpose of this report is to approve the audited statement of accounts for the council for 2019-20. As EY have already mentioned, the approval will be subject to the satisfactory completion of a number of outstanding items in their results report and any changes that may occur consequent to that. So given the position as at today, I'm hopeful that this won't result in any substantive changes. Obviously, if it does, then we'll circulate that information to members, but we're looking for an approval in principle on the statement of accounts, and we can report back on some of the items within agenda item 4 around the work that still needs to be done. So previous discussions on the 2019-20 accounts, both at committee previously on the draft accounts in the 30th of July, and then the training session that I did for members of the committee on the 5th of November. I hope they give you a feel and a flavour for the accounts document for the year. Obviously, it's a lengthy document, and it's the only form of external financial reporting that the council does each year. We include it on the website. It's available for members of the public, all other associated parties with the council to review. And I'm hoping that the discussions and the training that we've had ensure that members feel that they can engage with that document, and they can also give approval for the audited accounts as well. Certainly we made the offer at the training. If there was any questions, any particular issues in the accounts or the audit that you wanted more information on, you could have that and ask as appropriate. So, I hope that you all feel able to take a judgment, take an approval, which we need under the statutory rules on this particular item. I mentioned before around the sort of preparation and audits process for this account. So I think it's been I'm sure that colleagues at EY will agree that we're almost at double the time that we would have normally had for preparation and audit of accounts. It feels quite an arduous process on preparation. We had all the pressures of COVID-19, staff working from home. We had some staffing issues within the team. We got to a set of draft accounts. I think we've engaged well with the external audit team over the period of the audit. I'd like to thank Stephen and Mark for their kind words earlier. I think we've worked well together, but I think because of the circumstances around this audit and because of everything that's so uncertain with the pandemic, it's just meant that the the amount of time and the amount of sort of additional testing that's needed, and the amount of disclosures we've had to make have been higher, I think, than we expected when we were preparing the accounts. So there's a number of themes around that. If I can just take members to sort of pages 92 to 94 of the agenda pack. So as EY have mentioned, there are a number of accounting issues that we've had to change from the draft accounts that members saw at the 30th of July. There's 5 amendments to the accounts, 4 that we have changed within the accounts, and one that we haven't. And the reason for that lack of change on the lease surrender around the Newham Hall farm tenancy is that the amount is just over 600,000. It's an immaterial significance in terms of the overall accounting sort of income and expenditure that we have within this year. The amount of work that's involved in restating that's quite significant. So we would look to members to support our view around not changing that. But we have changed the other 4 amounts. So this is around pensions liabilities, so IS 19 and retirement benefits. The overstatement of assets on the pension fund means that there's a direct correlation of that to the size of the net pensions liability in our accounts and also in the other Tees Valley local authorities accounts. So all the councils are making changes for the overstatement of assets on the pension fund. The centre square liability around the leases that are in place, that's quite a complex professional judgment. Initially on our first draft, we came up with very similar results to what EY did. I think our sort of professional judgment was that those amounts in terms of a lease liability that was significantly lower than the capital investment in those buildings wasn't the right position for the accounts. So we did some additional modelling on that, and we ended up with a much higher figure. Certainly looking at the code of practice and in discussion with EY, we're quite happy that for the reason for that change. But I think professionally, I felt it was the correct position to be in. So we had a liability of about 21 million in the accounts, and after audit review, we've reduced that to 12 million. That's an advantage to the council's financial position. We've got a lower liability as a result of that transaction. But I think that the length of the lease and some of the assumptions have almost magnified the error and the size of the error on that. I think both the pensions and the lease liability are issues that affect the council over 35 to 40 years. They don't affect the medium-term financial plan or the revenue budget for next year. The complex accounting judgments, we're happy to work with EY going forwards on how we make sure that those are accounted for properly in due course. A couple of the errors that were made, I think should have been identified through management review. So I'm talking about the school bank accounts and the interest accruals issue. They're quite cosmetic. They're just adjustments in the balance sheet between creditors and cash and borrowing. They're quite easy to amend. That's something that we'll reflect on in terms of our own internal practices going forwards. I'd like to highlight as we get to page 94 to 95, we talk about a number of different disclosure issues. So when we were preparing the accounts, we were aware, obviously, of the pandemic at the time. We tried to cover that, I think, in a reasonable way. When we've been working with EY over the period of the audit, certainly the emphasis on going concern as we've moved through the audit has become progressively greater. So we've included specifically within Accounting Policies Note 1 more information about why we feel we're a going concern, what the risks and what the issues are to the council of us preparing the accounts on a going concern basis. So there's more explicit information within the statement of accounts than perhaps there was at the draft stage. Also, as well, we've enhanced the disclosures around the Centre Square lease liabilities. They're a material amount. We didn't really cover them in enough detail in the draft set of accounts. So we've included more information for users of the accounts, and I absolutely agree that's the right thing to do. Moving on to the pension fund accounts, Mark mentioned the overstatement of assets and some of the information being incorrect in terms of information received from custodians. So those amounts totaling £33 million have been reduced out of the assets totals in the accounts. There's also a number of sort of other accounting errors which come to just over £6.5 million. Because of the size of those errors, we wouldn't propose to change the pension fund accounts as a result of those. If anyone needs any more information on those, we're sort of happy to provide. And in a similar way to the council, the disclosure notes around similar issues, the going concern of the pension fund, the material valuation uncertainty around the assets that are held in the current environment, and both of those have been strengthened. We've also included a post-balance sheet event note, which gives the reader of the accounts information, which says that although the assets that the pension fund owned reduced significantly in February and March, they have subsequently recovered, not back to sort of like par levels in the first quarter of the financial year. So I think that's an important addition to include. We'd included it in some of our narrative explanations at the front of the accounts, but I agree with colleagues that it's good to be sort of specific on that. So I think that we're looking for approval in principle from members. We're working with EY to resolve the list of outstanding items as quickly as we can, and obviously, we'll report back to you if there are any changes before the audit sign off. We hope that will be over the coming weeks. We hope that there are not going to be any significant changes in the accounts from the version you've got presented in your agenda pack. So happy to take any questions, Chair, and I hope that's been sort of reasonable, understandable given the amount of time we've had on the audit.
Thanks for that, Justin. Well, I'll take members' indications for questions as and when I see them. Councillor Hubbard, you were first out of the trap, so if you'd like to go on.
Thanks, Chair. I've got two subject matters, which is officers' remuneration and borrowing. So would you like me to just say the first one, then come back on the second, giving other people a chance, if you wish, Chair?
Yeah, if you go with officer remuneration, and if anybody else has got a question on that, and then we'll move on to borrowing.
Thanks, Chair, will do. So it's on page 156 or page 57 in the report. It's basically saying that we've had many restructures over the year of senior management, and this has always resulted in massive payoffs to the officers. And the sweetener we've always been told is, don't worry, during the restructures, this will make a saving on the council. Yes, in 2018 and 19, senior officers' remuneration was at £853,000. And in 2019-2020, this has shown a massive increase to over £1 million. So I'd just like to know if we could have an investigation into the costs of the many restructures to see if any of them did actually deliver the promised savings.
Ian, you wish to come in on that point?
That's okay, Chair. I think that's fine. We can do that work. I think there's some things about how many officers get caught in that bandings with salaries in general increasing. So we can do some detailed analysis of that and circulate that to the committee, and we can discuss that at future meetings if we need to. If that satisfies the committee.
Councillor Hubbard, would you consider that acceptable?
Yeah, Chair. I just feel it needs looking into. Like I say, we've always been told we know these are massive payoffs, but don't worry. In the end, this will result in high savings, and it never seems to happen. And then we see more officers pay than ever. So yeah, I think I'd like to thank the committee for looking into that, and thanks to Ian as well.
Yeah, thanks for that. Does anybody else have any questions on officer remuneration? I mean, one point I would like to make, Ian, is in previous years it's always shown payoffs in a separate column. I know we've finally got there now, but it would have been much easier if we'd have seen and we could have identified what was, as we're heading it, compensation for loss of office, because obviously you've got the Director of Children's Services now showing us £72,000. If we can just be more explicit and clear on that, because as members we wouldn't have known, but as members we were also told that there would be no compensation following the Ofsted report should anybody lose their position. So I think it's clear that rather than the figure be fudged within an overall number, if we separate that, because it sends out a clear message to members that actually what they were told and what was delivered are two different things. I know that's not your doing, but if we can have that clear, because this is our opportunity to be able to view it and identify whether what we were told was actually delivered. Thanks.
I would certainly comment on that, Chair, that I think where we've got Note 13 now with that additional transparency and is the right place for it to be, and it's where I'd like it to stay. So that's how I'd like it to be. Thank you.
Thanks for that. Right. Does anybody else have any further questions before I go back to Councillor Hubbard? Nobody's indicated, so Councillor Hubbard.
Thanks, Chair. It's in relation to borrowing. It's on page 269 or page 5. It's borrowing in 2018-19 stood at £162 million, and it now stands at £242 million. This is an increase of £79 million, which is a 49% increase in debt within a 12-month period. So what I would like to know is what actions are being taken to ensure that the council's borrowing is sustainable. And whilst interest rates is currently low, the council has paid back over £6 million in interest alone last year. Does this represent value for money? Thank you, Chair.
Ian, would you like to pick up on this one, or is it Justin?
I think, Chair, I can give an overview, and if there's any more detail, then Justin can bring in that, if that's okay. I think, obviously, our assumptions around borrowing and the investment strategy that we have are factored into the medium-term financial plan, and therefore we are absolutely confident that we have enough funding in the capital financing line in the medium-term financial plan going forward to cover both our existing borrowing commitments and any further borrowing commitments that we intend to make and are currently planned in the investment strategy. In terms of how we manage the risk around interest rates, Justin can comment a little bit further if you would like to.
Yeah, that's absolutely fine. I think what I would say is that the last 3 years of the council's investment strategy, the amounts of capital expenditure have been significantly higher than in previous years, and we've delivered some large projects. So the the Teesside Advanced Manufacturing Park is one of the main ones. Obviously, we're including within borrowing the lease liabilities around the Centre Square building. So there's definitely been a more proactive approach from the council in terms of regeneration and large scale investment in the town. And that sort of ultimately comes back to, as Ian's mentioned, the revenue budget setting and medium term financial planning process. So there's obviously been key strategic issues which the council has wanted to address, and the increase in borrowing is as a result of that. I think in terms of interest rates, absolutely, base rates are at 0.1%, and borrowing rates for long-term projects are between 1% and 2%. So, if you think back to before the millennium, we were, as local authorities, were financing projects at 10 to 15%, and those interest rates are much, much lower. Our approach would always be to borrow at the lowest and the best value for money process, that we can do. We would look to match loans to capital investment projects. So if we're building a building for 40 to 50 years, we would look to borrow at fixed rates of interest for those projects. That we can borrow short term at lower rates of interest, almost at 0% at the moment. But if you're financing a 40-year project, you should really be it's prudent to take a 40-year loan. So we have financed these assets through long-term loans at fixed rates of interest. That means that the council's budget position has certainty, and I can give Ian information around what to build into the medium-term financial plan. So when we're talking about prudence, I think we're being prudent in terms of the investment when we're looking at affordability and sustainability of investment plans going forwards. We are really clear about the plans that are in place, and that we can pay for them out of the medium-term financial plan. Because of the increase and because of the pressures that are on children's services, there's obviously a tension in the council's budget as a result of that. So in the next couple of years, borrowing levels are relatively low as a result. That means that we can manage the capital financing costs as well as we can, and we can ensure that children's care is sustainable going forward. So a lot of these things go hand in hand. The key decisions for members when they're making the decisions around the revenue budget and the investment strategy for each financial year. So that's where the discussions that come out of this meeting really need to be had. Okay, thanks, Chair.
Are there any further questions, Councillor Rooney?
Thanks, Chair. I've got two questions. One on Middlesbrough Development Company, for which I'll have to declare an interest, and the other is on the reserves and the amount. The first one on MDC, are we going to see more detail about the accounts from Middlesbrough Development Company? I know in terms of the money that they are using, although it's not insignificant, it's not a lot in comparison to the rest of the budget and the accounts. But will we start to see more information on how that money is used? And my second point, if you want me to just do it because it is brief, is on the reserves and the fact that we've now gone down to 4 million. Is that enough, and what can we do to increase it? Thanks.
Okay, thanks, Chair. So in terms of Middlesbrough Development Company, because this is a wholly owned subsidiary, what will happen as more projects are approved for MDC to undertake, their financial assets and liabilities do have some impact on the council's financial position. So when they go over the materiality threshold, which is around £8 million for for this year, and probably will be similar for next year. The accounting code of practice recognises this as an issue, and as well as producing single entity accounts and financial statements, we'll have to include something that's called group accounts. So that is about giving more transparency and more information for any companies or any other partnerships where we have financial undertakings involved. So my expectation is for 2021's accounts, given the fact that Executive approved £24 million of loans for 2 projects from the council to MDC, that we will be preparing group accounts, and MDC's accounts will be incorporated into ours as almost an addendum on the back of the statement of accounts, and we will be looking to give accounting policy and disclosure and accounting statement information for the transactions that MDC are undertaking. So certainly the visibility of MDC as they start to spend money, given they're a wholly owned company of the council, we will need to bring that. So that'll be probably the key change when we go to the 2021 set of accounts. I think in terms of reserves, obviously reserves are a key issue of the council, and making sure that we do have enough money in reserve. I think that Executive and the council has already taken a positive decision to move some money from an investment strategy reserve to cover and make sure that the general reserves are at a level that Ian feels is appropriate for the council's future plans. I don't know, Ian, is there anything you want to say on that?
Yes, please, Chair, if that's okay.
And Ian, that's fine.
Thank you. I think the £4 million figure that Mark referred to earlier is the amount we've used in year towards COVID. Our recommended level of balances is 9.4 million, and we are still above that because the money we've used in the current year, as decided by council, was taken from the capital programme, so that was funded. We took expenditure out. So we are still at that place of being just above the 9.4 million at the moment. Obviously, speaking as the Director of Finance, there's always a tension between the level of reserves and what happens with services and expenditure and all the rest of it. I'm comfortable that at this point in time, the £9.4 million judgment made by my predecessor at the end of the previous year is still current. We'll continue reviewing that, and when we get to budget setting, I will restate my view on what I think the level of reserve should be. Thank you, Chair.
Answer your questions, Councillor Rooney.
Yes, thank you.
Okay. Are there any further members with questions? Okay. Councillor Audit.
Yeah, thanks, Chair. It's not a question, actually. It's just to say I apologise to you, Chair, and the members and the officers. I should have declared a pecuniary interest. Councillor Rooney's just reminded me there on the Keysight pension fund, so my apologies for that.
You better add mine to that as well.
Yeah.
Thank you.
Okay. I mean, one thing that did raise an eyebrow there with regards to the accounts is obviously the borrowing, because looking at the figures, we're effectively in negative equity, and we've paid back a lot of money in interest, over 6 million. So I'm wondering, I'm aware that you say we've got strategies in place to look at sustainability and whether we're going to deliver on value for money. But for the committee's peace of mind, it would be reassuring to see Audit do a piece of work on that to ensure, because it's a massive increase. And one thing we always get criticised for is the way authorities borrow and spend. So that's what I would like to see, if that's possible, Ian.
I think, Chair, obviously borrowing is a very broad category, so I think there might well be useful pieces of work that Audit can do, but I know we've got a meeting scheduled for next week around internal audit. I'd appreciate the opportunity to talk to you in a bit more detail around that and maybe formulate some proposals to bring back to the committee.
Yeah, that's fine.
Thank
Does
you.
anybody object to those proposals being brought back? No, that's great. Are there any further comments, questions by members? Brilliant. Okay, so I'll move on to the agreement approval of those. The committee happy to approve those statement of accounts for 2019-2020?
Yes, Chair.
Thank you. Okay, so I'll move on to agenda item 6, which is the letters of representation. Ian, you've got your microphone open. You look eager, so it's suggestive that you're going to pick this one up.
Thank you, Chair. I always try to look eager. These letters of representations are the documents that are required from external audit from the council, setting out a formal written record of the representations made by the management of the council to confirm certain matters or to support other audit evidence as part of the preparation of financial statements. Covers issues such as compliance with regulations and management of fraud, provision of information associated with the audit, liabilities and contingencies, confirmation of reserves, balances held, and how we've used specialists in preparing the account information. So they're a technical document, but they're what we sign and supply to EY, and they rely on that in their work. So it's a point of information.
Okay, does anybody have any comments, questions on that? We're very quiet today. Is everybody all right? It normally generates questions. And David, the pension fund's been mentioned at least 12 times and you've not said a word.
Well, I could have said, Chair, but I just thought I'd be quiet. I'm happy that the money has gone up, which it has, and I think the pension fund's in an extremely good position. But there again, I would say that, wouldn't I?
See, there is some positive out of these meetings. Okay, thank you very much for that, Ian. So, our members happy to note those letters of representation.
Move them, Chair.
Yep. Okay, that's great. And now we're just going on to the agenda item 7, which is the approval of the audit accounts, the verbal, but we've ticked that one off, haven't we? Yep. So I'll move it on to agenda item 8. Any urgent items in the opinion of the chair which may be considered? There's only one. Go on, Ian.
So I was just going to ask for the opportunity to briefly speak, Chair, if you
yes,
don't mind. What I just wanted to say was, from my point of view, to thank Justin and my team of officers who've worked on this in very, very difficult circumstances in the current financial year in the COVID crisis, and also thank EY for their professionalism and dedication in getting us to this stage. There's a twofold issue here around trying to produce a statement of accounts in the current circumstances. One's the obvious practical one of people not being in the same place and everybody working remotely and trying to produce a very, very complex document. The other is the meat of things, which is, as has been alluded to already, you know, trying to work out what something was worth on the 31st of March is actually substantially more difficult this year than it is in a normal year. And I want to thank everyone who worked on that. And as I say, our colleagues in EY. So thank you, Chair.
Thanks, Ian. You're premature there. We always do the thank yous at the end. But no, on that note, I might as well agree. I definitely agree, support that. I'd like to thank officers for the work they've done. Justin, you must have been browbeaten with this one. You've had to deliver training as well, which was in depth for members. And I think it has been extremely difficult, given the impacts of COVID, to pull all the information together and put that in place. So that's well acknowledged and thanked for that. I mean, obviously these accounts don't relate to the financial impacts of COVID. That'll be next year's joy, but the actual complications of working through them has been this year. So that's thanks to everybody who's contributed to producing these for the year. I'll step on to agenda item 8. Any urgent items which, in the opinion of the chair, may be considered? One item. Now I can see Ian about to frown, but it's all right. It's not us for a change. At the ad hoc scrutiny on Monday, I was there as an observer, but in the responses and the answers of that public meeting regarding £20 million of funding for Boho 10, it was stated that Middlesbrough received it following a discussion in the Mayor's office with the Chief Executive, the Tees Valley Mayor, and his Chief Executive popping over off spec on a Friday evening. Now, I know it doesn't directly relate to us, but that has been announced through a Middlesbrough Council meeting, and we know that there's processes and governance for a reason. So either that did happen and the £20 million was approved as stated, in which case begs the question from a Tees Valley Combined Authority overview and scrutiny perspective, have the correct processes and governance taken place? So I think it would, and I would like to move that it's the committee's duty to raise that with the chair of the Tees Valley Combined Authority overview and scrutiny, because either it didn't happen or the Tees Valley Combined Authority, which have a significant budget, aren't following the correct process. I don't know which one, but it certainly begs the question, because I know we have processes in place for any spending. So I'd just like somebody to second that.
I'll second that.
Okay, thank you, Councillor Wright. Is there, rather than go to a vote, there's only 7 of us. Is there any are there any dissenters within the ranks with regards to me writing to the chair of the Tees Valley Combined Authority overview and scrutiny and alerting to them to that information and that process that was stated? Okay, there's been no dissent. John Hobson no doubt will be pleased, because he's the vice chair of Tees Valley Combined Authority overview and scrutiny, and it'll create more work for him and the chair. And on that note, I'd like to thank everybody for attending today's meeting. It wasn't the usual time. There have been technical difficulties. I've been balancing a phone, an iPad and my laptop to try and get into the meeting and stay on. And thanks to the technical officers as well that have had to endure complications today. Thank you very much.
Thank you.
Thank you,
Chair.
everybody.
Thank you,
Bye.
Chair.
Thanks.
Bye.
Thanks, Chair. Thank you.
Cheers, Scott.